What's up, traders? Tom Crown here with an emergency spice update. Bitcoin is red. Are we dumping? Should you be worried? We'll take a look at the chart, we'll put emotions aside for today, and we'll focus on the logic. So smash those likes and subscribes, check out the links in the video description below, and we're about to jump into the content. On our last Bitcoin update, we were watching Bitcoin on the weekly. We speculated that with a close above the weekly 20, we were in for some green, but that's not the close we got. Failure to close above the 20 weekly, and we're getting pretty much what we expected. So far, the blood has been contained. With a few days to go, this weekly is still up in the air, but there's a few things I wanted to make note for you guys. Intra-week, with a margin of error, we've backtested that 20 weekly moving average, and now we are in a red candle again. In the last few hours, the weekly candle has retested the 50. We can see this here as a yellow moving average. In the last episode, we spoke of potentially a double bottom on the weekly or a slightly lower low. What's important here to me today, and what will remain important into this weekly close, is to hold above the 50. Back in July, we very briefly traded and closed. In my opinion, this is the most important level to hold into the weekly close. If it is held, I believe the bulls have a very good chance of pulling off the same move as we saw back in July, resulting in a rally to a new all-time high in November. So let's zoom in. Our clearly established descending high trend from April to September has been backtested. You may have seen my tweet at TomCrownCrypto about this chart, but there's a very important trend line that you're probably not aware of. Our ascending low trend line from the weekly time frame. These two trend lines converged nearly perfectly on December 4th, the exact time that we saw Bitcoin trade down to the 42,000 level. We've seen a mediocre bounce since then, and at the moment, price really does seem to be following our slightly lower low or weekly double bottom pattern. We are going to take a look at this on a smaller time frame, but real quickly, I wanted to point out something that's a little unusual that I think you guys need to see. Right now, I have my chart set to the regular setting. Typically on this channel, we use the logarithmic setting as I believe it to be superior for charting Bitcoin. But as good analysts, we have to watch every angle at all times. On the regular chart, we see this ascending low trend line acting as support over the last few daily candles. However, when you switch the chart to logarithmic, that descending low trend line actually becomes resistance. We can see that just 2 days ago, Bitcoin rallied up to this point before rejecting. I'm not quite sure what to make of this. I do usually lean towards the log, and so this very well may be a diagonal resistance. The good news is our descending high trend, the green line here, is still unbreached since the initial touch. If this sell-off continues, I would expect to find support back at this trend. So let's take it to the small time frames. Using our Fibonacci retracement tool, we can see a swing low to swing high that suggests our golden pocket retrace 46,170 as low as 45.5. What I like about this is how close it is to our descending high trend. This is building confidence for me that on a test of this level, Bitcoin will find buyers and support. Zooming in even farther, from December 8th to swing high, our measured move to the downside points to this level exactly and that same trend. Now, there's no guarantee of a bounce at this level, but there's a lot on this chart suggesting to me that the market may look to push up before the end of this month. This might not be the most exciting news to you, but I know a lot of you out there are feeling some emotions today, and I figured let's bring the charts in. We have a logical place for price to bounce. And despite sentiment being at nearly record lows, I'm thinking it's time for Bitcoin to see some reversal. I haven't lost hope in December's rally yet. Watch for a bounce today around these levels. If we do not find support and we break December 4th's low at 42,300, things can get a little uglier. If our low is broken, our Fibonacci tool is suggesting that price may seek as low as 37,200. Honestly, guys, my opinion, this is pretty boring price action. I'm seeing a lot of fear and emotions in the market right now, typically in my experience have signaled the bottom. That's all for today. Happy trades, fam. Crown out.